When the sirens are blaring, we need to get ready. Right now, there have never been more warning indicators that we are far beyond where we should be. But I guess this time is different, right? You came here for the truth, so let me unveil that for you. Today we're going to look at various indicators, and I want to begin with this. Investor expectations soared to record levels just before market correction. How many times have you heard, this time is different? This goes for individual stocks. What about BREX? I happen to know somebody who invested in BREX, lost a lot of money. Why? Because the euphoria was taking it to new heights. People didn't know what they were doing. Completely non-sophisticated investors were getting in because they read about it in the newspaper, thought they could make 2, 3, 4, 10 times their money, trying to chase those gains. And they lost it all. Well, this happens in every single bull market. People get too arrogant and they watch all of their profits lost in an instant. This happens every single time. We are now at the highest on record. Information's coming as of January 2018. You are seeing this statistically. It just doesn't make sense. Well, this, to be specific, is the mean percent expecting a 12-month stock market rise greater than 62% and percent respondents answering a 100% probability greater than 10%. So essentially what's happening right now, is there a probability that the stock market is going to increase? And a large percentage of people said yes. And that here shows us that we have a big problem ahead of us. When people get too arrogant, they become blind, they don't see the warnings, they don't see the indicators, and unfortunately, they get far too into it. And the fact remains is that the longer we keep this going, the more parabolic the rise is going to be. It is a hockey stick. When you look at it between, let's say beginning of 2017 into January 2018, it was going higher than it ever had been before, and it wasn't making any sense. Now it has come down somewhat, and it's been sort of fighting back and forth, up and down, and there was always new tensions every day. But finally, volatility actually has an impact on the market. Bad news is no longer good news. It can actually be bad news. S&P 500 price per share growth versus sales per share growth. Think about this. When people look at the economy, they relate that to the stock market, and that is a very, very big mistake. Not even corporate profits relate. Just look at the prices of the shares rising and rising, yet the sales per share growth is rising much, much slower. And we could see this type of activity when you compare it to the GDP. You get a similar line. When you compare it to any sort of, let's just say wages, you'll get the similar line. But the price per share seems to be increasing higher and higher and higher. They don't correlate. And as time goes on, it only gets worse and worse and worse. And this is as of just the financial crisis. I'm not looking back since 1929. I'm looking back since 2008, showing you this information. This here, I always like to show it. Robert Shiller's information, it's good. Showing you the PE ratios. Okay, specifically the CAPE. 33.41 right now. Historically, it should be about 16. Some say 15, some say 17. Doesn't really matter. Right now, we're at about double where it was historically. That doesn't make any sense. It really doesn't make any sense, and this has to change. Something has to give. Ultimately, I don't know which direction it's going to head. There seems to be a whole bunch of gurus out there, a whole bunch of financial experts out there who can tell you that information. But I know that interest rates are basically near rock bottom. And as a result, stock market has risen considerably. If interest rates change course, we will have a decline. And there are numerous individuals in the financial industry who have agreed with this and who say that this is standard fare. Nothing new here. It's just the way it is. Bring interest rates down, stock market can continue. Look at the housing markets in some places where they're giving out, extremely low interest rates and hold them for the entire term of the mortgage. So you don't have to, change your mortgage after a 5-year period, 3-year period. You literally have a, let's say, 25-year mortgage. You're going to be able to maintain that interest rate of basically zero for that entire time. That's insane. Of course, that's going to continue on with this bubble. You can't maintain any sort of realism with these incentives that people are getting, which ultimately skews everything. It's distorting the market permanently. This market will never, ever be the same again. Percentage of loss firms, 1960 to 2016. And there is a disparity in between the science-based and technology firms and all firms. However, as time goes on, more money is being lost by these companies. That's what that tells us. Companies are burning money. Now, some are definitely doing well. Some are sitting on big piles of cash. Some are able to buy new companies and all sorts of acquisitions and everything. But a good percentage of companies are really, really losing out. And that's why I see more conglomerates forming. That's why I see less and less competition out there. And this really shows us what's been happening. This is a little change of direction, but I think it's important. Now, a lot of people who are highly educated, maybe they have their PhD, their MBAs, their masters, many of them, not all of them, have found themselves in a predicament because they are unable to get into a position that they would have liked to. And they have a lot of debt. They've been piling on, whether it's, $100,000 for a course like this, maybe a PhD. Doesn't matter. Well, in this case here, essentially what they're saying is that what this article is claiming, that a lot of people are not getting into their MBA anymore, and instead they're going to tech. They're making excuses for why. I would say this. There are many degrees out there where there are simply too many people who have that particular piece of paper. And so it dilutes the value of that paper. If you were the only one who had this MBA ever, then obviously you'd have companies around the world trying to hire you. But if you are among, let's say, 50 applicants who apply for a job, you all have the MBA, suddenly your MBA doesn't really mean that much. You need to look for other things. So that's what's been happening. They're trying to blame it on different things here, but I really don't see that. I see it as too many people getting too much of the same, and unfortunately they have a big pile of debt and not enough to show for it. So this is going to be a big problem. A lot of people unfortunately have taken on so much student debt and they don't know what to do. So that brings me to my next article. It's telling the story of a particular individual, but essentially what we're looking at is thousands of people, students at UC Berkeley, relying on food pantry. And that is essentially the food stamp program. Can you believe it? More than 500 students have applied for food stamps since January, up from 111 in all of 2016, and so on. Can you believe it? Students. Now, of course, some would argue there's, scams going on. There's people who shouldn't be on them and they're taking advantage and they're manipulating the system. But I would have to think that many of these individuals are in so much student debt as a result, and they don't have enough money because they're getting in over their heads. These degrees are incredibly expensive. It's supposed to be an investment. that you would be able to then get a good job on the way out. You're taking on the debt now, but it'll pay off later. Unfortunately, I think that now in 2018, where we're at, people need to reconsider the situation. I'm not saying that they shouldn't go and get an education. However, I think that some people, if you're in a situation where maybe you can't afford it and you'll end up on food stamps like this, I don't think that's really maybe a wise decision. That's just the way I see it. I'm not suggesting anybody do anything. All I'm saying is that we are now at a time when the economy is not doing well, despite what we're being told. And we need to have our finances in order, or else we're going to be in big trouble in the near future. That's all I'm saying. It doesn't matter if you're a student, doesn't matter if you're 80 years old. Anywhere in between, what we have here is an issue that's presenting itself, and we want to make sure everything is in order by the time this situation occurs. That's what I'm trying to say. So, if you found the video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. So, I appreciate that very much. Last but not least, if you found this video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.